Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, looking at oil starting off on the weekly time frame because that is the pattern that we use to dictate what we were looking for this week on the inventory report. We've got our higher low uptrend line hitting 4 times, so it's a valid trend line. We've got our downtrend resistance line hitting 5 times, so that's valid as well. These lines were drawn before this week rejected from them. So as we headed into this week, I was watching this downtrend resistance, knowing that we were extended to the upside as we headed into them, and we look at the daily time frame and see that extension where we have just been, we consolidated a couple times, but heading into the inventory report, we had 5 green days in a row, and we were right at that resistance level, and before the inventory report, the high of the day literally rejected off of it. So it looks like I drew this line to perfectly hit that top. That line hasn't moved in a couple weeks, and it rejected right from it. So heading into the inventory report, we had the mindset, if we see an initial bullish reaction, I would be comfortable taking a bearish position and looking for consolidation. And it couldn't have worked out more perfectly in terms of the speed and the magnitude of the downside, where we pulled back from, it was 51.85 down to 48.16, and that is about a 5% drop to the downside in just 2 days. So it was a really nice payoff. DWT had really nice gains to the upside, being the leveraged 3-time bear ETF. And then we were looking for the bounce, and the bounce was oversold, and we were looking at the hourly time frame. And what indicated the bounce to me, you don't even have to hit the bottom, because we did get a lower low here, 48.23, and we broke that, 48.16, so a little bit of a fake out. The clues that our oversold bounce was in was, number one, volume. Volume climaxes often signal the top of an uptrend or the bottom of a downtrend, and this was the highest hourly volume that we had seen in the past day or so, a couple dozen hours. And even if you didn't get that bottom, once we break the lower high pattern, that indicates the bulls have momentum as well. So the resistance up here was 49.29. As soon as you break 49.29, that's the bull signal. And we ran up here into the end of the week at 49.91. So a nice 62-cent move to the upside. Not huge, but it's just an example that you don't have to hit the bottom to be making profitable trades. And that 62 cents is about 1.2%, which again, for the leveraged 3 times ETF is a 3.5% move if just playing off of that line. So where we stand in the big picture of things on oil, looking at that pullback, and if we look on the weekly time frame, there is potential if we were to continue consolidating that we could pull all the way back down to the $47, $48 range to test this uptrend support line again. Every week that goes by that we don't head to that level, that support line ascends and is higher, but this is a bearish indecision candlestick, a spinning top, and we will be looking for the potential of pullback. So on the hourly time frame for resistance levels to be watching from here, there's not a ton of resistance in the near term because we dumped and didn't establish much resistance on the way down. I'd be looking at this initial support that we bounced off of. That's at 50.06, so right near that 50 psychological level. And then the next major level would be up at 51.20, the high of the last little bounce attempt. USO, look at the volume behind that dump. Very notable bear volume, and trying to recover an inside bar on the daily time frame to be watching on Monday. Bulls want to break 10.30 to try and see continuation to the upside, and a bear break would be at 10.09. Weekly time frame, there's that lower high, lower low pattern, and a bearish week here, so we're going to have to form a higher low and then break the high of this move of 1070 if the bulls want to turn around this trend, which right now is favoring the bears. And we did have this little bearish reversal head and shoulders pattern with the neckline breaking. This could just be another lower high before another lower low, so we do need to be cautious as bulls. And the USO chart is a bit more bearish on this weekly time frame than US oil is, and that's because US oil does still have the higher low pattern. And we can see back here in November, that's the support level that we were holding, and we just broke that level in November here on USO, just dipped below it. So a little bit of subtle differences there, but it's up to the bulls to prove themselves because the bears have a little bit of momentum now. So I appreciate you watching. We'll continue to check in throughout the week. Have a great weekend.